Hi everyone, this is AJ from GNS Accountancy. We are a CPA firm located in Ontario, California. Today I want to provide an update on the PPP loan program. Our objectives are, we're going to be talking about the self-employed PPP loan process, how to use the funds once you've received them, and then eventually and hopefully apply for the loan forgiveness. We will also talk about how the payroll tax credits tie in with the PPP loan. So as of 5 p.m. yesterday, $188 billion has been dispersed. The average loan size is $73,000. There's plenty of money still available. So if you haven't applied, please do so as soon as possible. And I know that these websites are still taking applications, Divvy, Cabbage, Intuit. You can also go to your local bank. You can Google search Divvy PPP loan, for example, and click on the link and apply. So if you're a sole proprietor or a 1099 contractor with no employees, you file a Schedule C, or you file Schedule E for a real estate professional, or if you're a farmer, you'll file a Schedule F. So the process is going to be absolutely the same. And we will use Schedule C as an example. So you will start off with your net income, and this is from your Schedule C that either you file with your tax return or you can complete this separately. The form is available online. So you'll need to file the Schedule C with your tax return or complete a Schedule C which is available online, and you can fill it out and provide it as proof of your net income for 2019. The amount will be capped at $100,000. So once you figured out the net income and it exceeds $100,000, you will use $100,000 as your base figure. You will divide that by 12, so you'll find out your monthly amount. Then you multiply that by 2.5 and that becomes your loan amount. 1099 contractors that are paid are not to be included in the calculation. I believe this does go against congressional intent. The SBA has made it very clear that 1099 contractors are not to be included in the calculation because they can apply by themselves. Some clients' applications have been approved with those 1099 contractor amounts, but this is contrary to the SBA guidance. I hope that when loan forgiveness is applied for, that they will get the same treatment as employers that paid W-2 employees. So sole proprietors with employees will take the amount calculated from the previous slide and then add in the wages plus any pre-tax benefits provided to employees such as health insurance and retirement plans. You cap those amounts at $100,000 per employee. Then you can add in the employer provided benefits such as health insurance, retirement plan contributions, and the state and local taxes. Those will be added in after you've capped off the $100,000 per employee wages, and then divide this amount by 12. The process will be the same for Schedule E and Schedule F filers as well. Once you've got that monthly amount, after you've divided it by 12, you will multiply it by 2.5 to get your loan amount. You will add this second step to the loan amount that you calculated in the first step from the previous slide to get your total loan figure. So how can the PPP loan funds be used? So the unincorporated sole proprietor, they will take the 8-week average of their 2019 income and use that amount for the loan forgiveness. They will also add, if they have employees, the employee payroll costs. At least 75% of the proceeds from the loan have to be used for employee payroll. They can add in mortgage interest on real estate and equipment. They can add in utilities, which includes electricity, water, gas, telephone, gas you use in your business vehicle, internet expense, and as long as these are deductible, you include those. You can include rent expense on your premises, and any of these amounts that you use for forgiveness should have been incurred before February 15th, 2020. So if your rent payment increases in April, you will revert back to the contract that was as of February 15th and use that figure for the loan forgiveness amount. So all of these steps also apply to business entities. The sole proprietor calculation, particular to the Schedule C, that's just for the sole proprietors, but all the other elements to these slides will also apply to those incorporated businesses such as your LLCs, your C corporations, and your S corporations. So when it comes down to loan forgiveness, what forms do you provide to the bank? The bank will have approximately 60 days to review your documents and provide you with an answer on the forgiveness. For the Schedule C filers, those sole proprietors, they will provide a copy of the Schedule C itself. This is because the sole proprietor will base their own pay, the sole proprietor's own pay, on the 8-week average from 2019, based on the net income that was reported on the Schedule C when they applied for the loan. If they have employees, then they will provide the 941s for 2019 and 2020. And by the time the 8 weeks is over for paying those expenses, the second quarter 941 will be available to provide to the bank. 940s and W3s will not be needed because those are annual forms. And if you don't have the 941s available, ask your payroll processor to provide you with a payroll summary. Other expenses that also will qualify for forgiveness within the 8-week period are going to be rent expense. You can provide a current lease agreement, utility expenses, and for those you can provide utility bills. And for interest on debt, you can provide the proof of payment, the amortization statements, the financing agreements. And for all of these expenses, you will have to provide most likely bank statements showing the debits going out of your account. So the PPP loan potentially provides you with free money. However, the IRS likes to get in the way. There's a concept in tax called cancellation of debt, and those who receive a cancellation of debt income, they will get a 1099-C. So if you've ever had a loan that's been cancelled, or a credit card that has been, if you've ever had a loan forgiven, you will get a 1099-C. You would have to include that amount into income. However, there are exceptions. But in this case, the IRS has made it very clear any portion of the PPP loan funds that are forgiven will be included into income. And another way to look at it is the expenses that you pay from the PPP loan that qualify you for forgiveness will not be deductible on your tax return. However, there is hope. Congress is currently working on making an exception to allowing those expenses that you pay from the PPP loan to be deductible. So let's put this into perspective. Let's say that you take a $500,000 loan that becomes completely forgiven. Approximately your tax bracket would be 35%, and the tax amount on that would be $175,000. As you can see, this has a big tax impact. Hopefully Congress can make the exception and allow for the deductibility of the expenses, as well as allowing taxpayers to obtain loan forgiveness. Some clients have had changes in their operations as a result of the pandemic. However, to obtain forgiveness, there are certain criteria that have to be met. So headcount cannot drop. This needs to be the same as the amount that you input into your application. If you've laid off employees, you need to rehire them to maintain that headcount. I know that this is difficult because the IRS is providing an extra $600 to employees when they're on unemployment benefits. However, Congress is trying to provide incentives for those workers to come back and work. Now, this might be too late for some businesses as they've got the funds right now and employees are either laid off, don't want to come back to work. However, the SBA guidelines are very clear that at least 75% of the loan proceeds need to be used on payroll. Anything that is unforgiven will roll over into a 2-year loan at a 1% interest, and the payments will start 6 months after you receive the loan. So I get a lot of questions on the payroll tax credits. So how does this tie in with the PPP loan? Well, so going back to the Employee Retention Credit, what it is, if your business is partially or fully suspended, or you have a greater than 50% drop in gross income when compared to the same quarter in 2019, then 50% of the wages that you pay, you can apply that as a credit towards the employer portion of the payroll tax, the IRS portion. The Families First Coronavirus Relief Act, that provides for paid sick leave and family leave credits. So whatever you pay towards that will offset completely against the payroll tax liability. So essentially you're not paying anything out of pocket for paid sick leave or family leave. I will go into more detail on another podcast on how to obtain the benefits of the FFCRA. However, we are focused on the PPP loan in this presentation, so you cannot take the payroll tax credits at the same time as asking for forgiveness for the PPP loan. The PPP loan have to be spent over an 8-week period to qualify for the forgiveness. So whatever you pay in the 8 weeks, you will get forgiveness for that amount. At least 75% of it has to be on payroll. If you want to take advantage of these payroll tax credits, you have to do so before you get the PPP loan and after you get that forgiveness. So after the 8 weeks is over, you can use these payroll tax credits until the end of 2020. So these payroll tax credits can provide a great cost saving to employers, but they just cannot be used at the same time as the PPP loan. Again, my name is AJ. I thank you for listening to me today. If you have any questions, please send me an email. I look forward to hearing from you. Thank you.